Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today I have Thomas Schlesinger and Matt Linton on the line, and they are co-founders and managing partners over at Arpeggio Investment Management. And this interview is part of our iConnection series, where we bring you the best of those that attended and participated in iConnections in Miami. First thing first, Thomas, Matt, welcome to the show.
Thank you. It's great to be here.
Thank you. It's great to be here.
All right, guys. We got a lot to talk about today, so I definitely want to get into the work that you're doing over at Arpeggio Investment Management and get into your backgrounds, too, and really how you got started in this business. So that's always interesting. But before we do that, iConnections, I'm curious. You were in Miami. Have you been to an event before? Have you been a member for a while? Or, just give us some of the backstory.
Yeah, sure. So we actually attended last year for the first time in the end of 2024 going into 2025. And last year there were a few meetings scheduled for us. This year was a lot more successful. I actually believe the average meeting per LP in the event was around 7 or 8, and we managed to schedule 25 meetings. So it was pretty productive for us this year. Obviously, as you begin to build a track record, and we're close to hitting the 2.5-year mark now, more people turn an eye and begin to gain interest. So I believe that overall it was very productive. We met with a few allocators that had met with us last year and have been tracking us for the last 12 months. And we believe that the next 12 to 18 months should be pretty positive for a capital raise. I'm
just curious on what do you think a lot of different ways you could spend your time, a lot of organizations. What do you think makes iConnections special?
I'll jump in on that. iConnections, I believe, is a nonprofit, but they've really built a great product, and that product is what allows the allocators to see the information of the funds and to, as they say, to really get people together in one place. The FaceTime is what's really important, but the platform has become very robust. There are a lot of data platforms out there because you have segmented data when it comes to funds, and of course, the networking is always very difficult, but they put it together in a really great product. And even from whenever we joined last year, the upgrades to the platform have been immense this year, and it goes from entering your performance in real time. You can actually link it to your administrator now, and then throwing off all of the statistics that every potential allocator would like, to updating your bios and other information. And it's also a real-time communication platform, so we can send messages to allocators throughout the year, and it's been a really great experience, and we'll be back once again next year.
That's amazing. Yeah, I'm just getting introduced to the platform and everything else, but I've been hearing about it for a while. Like, everybody's like, oh, you got to come to this. You got to start covering this. You got to start doing this. I cover a lot of the other conferences, like your Milken Global Conference and a bunch of FII Priority and a bunch of other big conferences. And I'm like, iConnections. I keep hearing it. If I hear it enough times, like, all right, I'm going. Let's see what this is all about. And I saw it, and I was just pleasantly surprised. I'm like, man, the people that are in this room and the people that come here, they mean business. And when I saw the back-end app, again, I hope all my other conference organizers aren't listening to this, but when I saw the app, and I'm like, wait a minute, this is next level, because I've seen them all. I shouldn't say all, but I've seen many of the top apps because I cover the nature of what I do. But I was like, man, this is great stuff. And that's awesome. Well, let's switch it up a bit here. I want to get into your firm and what you're doing. So Arpeggio Investment Management. First off, I see co-founders. I can't have co-founders on and not ask them this question. How'd you guys meet? How'd you guys figure out you wanted to be in business with each other?
Matt, you want to answer that? Or
You're actually good. This question comes up quite a bit, and Thomas has this one down pat, so I'll let him take it.
Take it, Thomas. I want to know. And sometimes I do these interviews separate, so then I'll ask each co-founder the same question. We get to see whose story matches. Go ahead.
Yeah, no, that's fine. We actually met at a JP Morgan luncheon in 2017. It was a private investment event. And since then, now for the last, 8-9 years, we've been bouncing around different investment and trade ideas and have actually invested in a few private companies together. And about 3 years ago, we decided that we spend so much time on this on any given day that we may as well make it our job. And given our different backgrounds, Matt more of a trader, trading different markets and market environments for the last 25 years, and me more of an investor, we felt like we had the tools to together launch this hybrid approach to alpha, which really is this concept of our multi-strategy fund that has three main strategies. And we can dive into that if you want, but that's how we met and how this became what it is.
That's amazing. I always tell people, I'm like, how did I meet my co-founder? I swiped right on LinkedIn. Like, we met on LinkedIn, random LinkedIn meeting. And 10 years later, we're still together. I'm like, oh, man, watch when you're taking coffee meetings with people, right?
Yeah, no, we actually met the old-fashioned way. I actually saw this really interesting article the other day that's about 65% of new relationships start online now through dating sites, and less than 1% start through meeting people in public or friends. So I could check the box on both my business relationship and my current wife. We're both the old-fashioned way.
Oh, that's amazing. Let's switch it up. I do want to go into the strategy. Who wants to tackle that one? Like, tell us a little bit more about exactly what you're doing at Arpeggio.
Yeah, so we have three strategies. As Thomas mentioned, it's a multi-strategy, and I'm going to water down some of the two other strategies, which I'm in charge of special situations, which is our sort of second bucket of alpha, and we jointly manage a pretty dynamic hedging strategy. The main strategy of the fund is our long-only core portfolio, which is what Thomas's background is. I think since that's probably our lead strategy, let me hand it over to Thomas to go through that, and then he can push it back, and I'll briefly talk about the others.
Yeah, sure. So our core strategy is where at any given time we have about 75 to 85% of the funds in. Here we're looking to deploy capital into 10 to 15 U.S. publicly traded names that we believe can outperform the broader market. Usually these are companies that are earlier on in their business cycle, so we wouldn't necessarily invest in Mag 7. Not that they aren't great companies, but they don't really fit our investment profile.
Right.
We like companies that are growing revenue closer to 25 to 55% per year and that are leaders in their space. So an example of three companies that we've had in the fund since day one are Uber, CrowdStrike, and Palantir. So whether it's Palantir on the data analytics side or Uber in AV and rideshare or CrowdStrike in cybersecurity, these are all companies that, at least initially when we took positions, were companies between $20 to $30 billion. A lot of them are around 100 now. And obviously Palantir has been a huge success, and we've had to trim that 5 times just because of full-on just risk management. But in general, this is a part of the portfolio where we're looking to generate long-term capital gains. We do periodically sell calls against our positions and buy short-term puts to hedge into different earnings reports and macro events that we think can impact the portfolio. And it's a pretty concentrated portfolio. We typically have weightings in positions between 4 and 10%, and that's the core portfolio in a gist. And again, we don't necessarily focus on tech companies, although a lot of our best ideas do fall in tech, obviously, but we do have some healthcare, biotech, and industrial exposure too.
And the other strategy, I believe, we're going to loop that in?
Yeah, special situations. So this is pretty much what I've been doing my entire career. Just to take a step back, after I graduated University of Texas, go Longhorns, I went straight to a trading desk. And so I basically have been doing this my entire life. So as Thomas mentioned, I've been trading through different markets, looking for niche strategies, and that really is the toolbox of what became special situations. And this is an area where we're looking to generate short-term gains, and it's not correlated to the core portfolio, the market, or the hedge strategy necessarily. So this is something, potentially where strategies are used during volatility. They're used for catalyst-driven events, corporate events. A couple of the main focuses that we consistently do are index rebalancing. So the major index families like Russell, S&P, and MSCI, we have a specialized strategy that's been adapted over 20 plus years that we consistently use. And merger arbitrage as well. It sort of crosses with index rebalancing because we're really looking at the first days and the last days before a merger closes. We don't necessarily tie up capital betting on whether a spread is going to close and how long it might take. We're more looking for discrepancies in the spreads during these times. And like I mentioned, catalyst-driven trading is something we're always looking at. That can be, that can be news, that can be thematic, it can be swing trading. And, like I mentioned, it really kind of depends what we use, with what the market is giving us at the time. And it's been a successful strategy for us. It's very low value at risk, a smaller part of our A, but, generates a significant portion, probably the 20 to 25% of our total returns come from this strategy. The reason why it's important is because, as Thomas mentioned, we kind of call this an alpha chart. One thing that iConnections is very helpful for is you're putting us in front of allocators and, with the potential to raise money. But as a smaller fund that has a 2.5-year track record, you don't necessarily know when a check is going to show up the next month. So, you have to be a little bit used to dealing with a static portfolio. And if we're not, buying and selling and have high turnover in the core portfolio, then we need to be able to generate some cash from trading so that we can put those into our best ideas when we find value. So that special situations finances a bit of the core portfolio at times. Of course, it's wonderful to get an allocation and then to determine where we want to put it. But we sort of became accustomed to that. And the other thing that it finances is our hedge strategy. So we leave that in its own bucket because, as Thomas mentioned, we do some single stock hedging on our core portfolio just to round out volatility. But in general, our sort of thesis has been concentration risk in the market. So concentration risk meaning how much does the Mag 7 make up of the NASDAQ? How much does it make up of the S&P 500? And Mag 7 is well over 40% of the NASDAQ 100. So as they say, when the Mag 7 sneezes, the rest of the stock market tends to catch a cold. So we tend to use longer-term options on an index. It's usually the NASDAQ, but not always. And then we try and take advantage of certain opportunities like a Liberation Day or the yen crisis in 2024 to take off those long-term hedges or potentially sell premium against them during times of volatility. And that gives us another added flow whenever those hedges do come off. And they usually come off whenever we find value in our core names and we want to put money to work.
All right, gentlemen. So final question here today. First, kind of a two-part question. What are the correct types or the types of investors that you're looking for? Who do you find is normally a good fit, number one? And number two, how do people follow up and how do they connect?
Yeah, I'd say that right now, given where we are with our track record and the amount of time we've been operational, the best initially hedge funds, a lot of them start with family and friend money and people that are looking to take a leap of faith. But as you manage to hit the 2-year mark, that's when you begin to get a lot of family office interest. So I would say that is probably the highest candidate right now, given where we are, and potentially eventually larger institutions. There's always interested wealthy individuals, but fund-to-funds and single-family offices right now seem to be the right fit given the type of fund that we have.
Yeah, and to just add to that a little bit, the reason I think that's a good fit for us is that we've noticed through our meetings at iConnections and outside of iConnections that family offices are looking for differentiated alpha. They're, not looking to just put their capital in the NASDAQ or the S&P 500. So that's particularly the niche that we're in. And so, when we're able to tell that story and how we create alpha while, basically betting against the NASDAQ, that's usually the narrative that works the best.
And how do people follow up? How do they connect?
So they can visit our website, which is Arpeggio, ARPEGGIO, so Arpeggio Management. And they can contact us through the website. We also are on social media as well, but Usually email is a great way to introduce, and Thomas and I are always available to jump on call and to introduce ourselves.
Wonderful. And for everybody listening, just so you know, we'll definitely put some links in the show notes so you can go and connect with Thomas and Matt. And speaking of the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. Yes, you heard me correct. Each and every day, we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way on your journey as well. So hit that subscribe or follow button. And Thomas, Matt, man, it's been great having you on the show and wishing you much more continued success with the setup. So thank you so much for coming on.
Thank you, Adam. Appreciate it.
Thank you. Thank you very much. Great conversation.